So guys, and welcome back to my channel. Today I'm going to be breaking down this trade I took on Friday and the strategy I use in taking the trade. So just pay attention, listen. I bet you if you trade this strategy 2025, you're gonna see a lot of changes in your trading. You're gonna make a lot of money with me. Come on, let's get right into it. Alright, so let me clear my chart here. Let me clear my chart here. Yes. Okay. Let me take the replay to and okay. So prior to Friday, prior to Friday, um, that's Tuesday, Wednesday, Thursday, we could see that we're in a downtrend. Market was creating lower highs, lower lows, lower highs, lower low. Then on Thursday noon, let me play price. Then on Thursday noon, we could see that price broke structure. So that was mark our this was our lower high, was our lower low, was our previous lower low that was taken out. So we could see the price broke structure. When price broke structure, this signaled to us that price is giving us a bullish intent. Price is about to buy, is about to go up. So what do? We jump down to our lower time frame to mark out our POI. So let's go to the 10 minutes. So on the 10 minutes, we marked out our order block, our bullish order block. There's a sweep right here. Mark out our bullish order block. And our inducements, which was right here, because our inducement is what validates the order block. Inducement. Meanwhile, this whole structure that's inside here is all internal structure. It's all internal structure as it didn't take out this main lower high right here. So this is all internal structure, and this is where the new higher high formed. So let's play price. Let's see what price did. So as we can see here, price was ranging after giving us this our higher high. Price started ranging. We started ranging, and during Asia session on Friday, that's sorry Thursday night Asia session, price was also still ranging. And see price was still ranging. Also, price created liquidity for us. All this right here was all equal lows. That's liquidity to be taken out before continuing the trend on equal highs. Equal highs right here also. So as we all know, when price is ranging, price has to, as we all know, when price is ranging, price has to take out one part of the range, then reverse, take out the other part of the range, then reverse. So what's happened here? So price has to take out one part of the range and reverse. I know some people would have thought this is the correct order block, that oh, price will take out all these equal lows, then buy from here, but they'll get stopped out. Reason is, if you look at it on a higher time frame, that's too far. If you look at it on the higher time frame, it's all price is all efficient on the higher time frame. So this was just an SMT as a smart money trap. That was just a smart money trap to trap traders into thinking this is the correct order block right here. So let's see what happened. Let's see what happened on Friday morning during Frankfurt. During Frankfurt. So as you can see, during Frankfurt, price took out the equal highs, but what the price mitigate here? Price mitigated nothing to our left here. Price didn't take out this structure. Didn't take out this structure here. I would say is a BOS. So price didn't take out this higher high. So that's to tell us that this our structure is still maintained as long as price didn't take out this higher high. The price mitigated nothing here during Frankfurt, just took out these equal highs. Then as London opened, price reversed, came back down, took out this equal lows, pierced through the SMT, and at 4:30 a.m., 4:30 a.m., which is our trap timing for those that trade session, for those that trade London session, the Q zones and all that, because that's what I trade. At 4:30, price mitigated the right order block, and this was where I got into my position right here on this other block, and it was all up from there. Price started buying. So where was our first TP at? Our first TP was this lower high right here. This was our first TP. This was my TP1. And where was my TP2? My TP2 is my TP2 was this other high right here. TP2 was this other high right here. This was my TP1. TP2. So how did I know that price was going to get to my take profits? What gave me the confidence that price was going to get to my take profits? Well, if you look at this is liquidity, trend line liquidity. If you know anything about trend lines, you will know that they must always be taken out. They won't always be respected. They will always be taken out. So this was trend line liquidity right here. If you look at it on the higher time frame, like the 2 hour, you see that price is efficient on the higher time frame. So that alone gave me confidence that okay, price is going to take out this high. And if you look at it, price is also efficient on the higher time frame here. Price is also efficient on the higher time frame here. So that's what gave me confidence that price was going to get to my take profit one and take profit two. So let's see how let's see how all this played out. Price took out our TP1, then retraced down a little and went straight to our TP2. So that was how I caught this 10, I think it was 20 RR, I think it was a 10 RR, or was it 17? Yeah, it was an 11 RR. That was how I caught this 11 RR trade. So my strategy is pretty simple. My strategy is pretty simple. All you have to do is wait for a break of structure or chalk, or just wait for a structural shift, then identify your other blocks, your extreme order blocks or your decisional order blocks. But note that there has to be liquidity lying before the other blocks in order for it to work. Just like this is liquidity, this inducement here is liquidity, this equal lows here is liquidity. There has to be liquidity lying before it in order for your other blocks to work. So also this Asia range right here also gave me confidence. It also acts as a confluence, knowing that the trade is going to play out, because one price didn't mitigate anything here. It didn't mitigate anything here. Probably an SMT on lower time frame. So when it took out this high, that's what targets this low, because the draw on liquidity here is actually more. And this is an SMT, it's a smart money trap. It's a smart money trap because other blocks can't be lying at liquidity. Other blocks can't be lying this close to liquidity. That's be a little far. And also this is liquidity here. So other blocks can't be lying at liquidity. And also if you look at it, if for people that trade key zones, you would see that this whole area right here kind of like a key zone. This whole area right here is a key zone, is liquidity. This area right here is a key zone. Let's check it on lower time frame. You see what I'm saying? So your other blocks can be lying at liquidity. Liquidity areas like trend lines, key zones, um equal highs or equal lows. Your other blocks can be lying there. See price rejected, rejected, price rejected, price rejected, price rejected, price rejected. As you can see, so this is a key zone liquidity. So that was what gave me more confidence that that was what told me that this isn't the right other block. That the right other block is sitting right here. Get me? So what I'm expecting now is price should price should retrace back somewhere into this range before we resume the bullish trend. So I hope you understand this now. All you have to do is just wait for your change of character or your break of structure, then mark out your order block, mark out the liquidity line before it, wait for time and price to align. So you can wait for maybe this happened by like this happened at 4:30, which was our trap timing London session. It's literally when the market reversed and when the main move happened. So just wait for time and price to align, mark out your liquidity line before the order block, and execute. Is this simple? I mean, let me turn off this indicator so you'll be able to see it very well. Okay, so is this simple? Let me draw it out. Lower low, break of structure, liquidity. All this was just liquidity, market engineering liquidity. All this for market to take out the liquidity and then move. And if we look at it in another perspective, For those who trade accumulation, manipulation, distribution, all those, you see, this is our accumulation, then the market's manipulated people into thinking it's going to sell, they mitigated the right other block, and then the market distributing. We use another color for it. Then the market distributing. So it's the power of three. I think that's what they call it, power of three. So is this simple? Just mark out the other blocks, mark out the liquidity line before it, wait for your change in character or your book of structure. This is for a reversal trade though, because market is trending down. So mark out your other blocks, mark out your liquidity line before it, wait for time to align, like wait for your session, like London session, and execute. I hope you find this video very helpful. Please like and subscribe, comment and share. Also, I'll be dropping a link to my free Telegram channel where I'll be posting trades, free trade ideas and trades. You can take the trades with me. Um, Thank you for watching. See you on the next one.